Okay. Very quickly, first thing I wanted to go over was just like the current day's trade. Um, AVGO, I think it's fine as long as we close above 204. I think pretty much we're good. I don't think I would need to roll this contract because as long as we accept into this area here is really all I'm looking for. So just extend to the right, you can kind of see here that we are right under resistance. So definitely something to look out for as we come into the second half of the day. Let's see. Tesla, I mean, we're just range bound, right? I kind of mentioned earlier that the area we need to close above is 294 until we get some true confirmation there. So either going to give it more time on Monday, or I will probably just cut if we are not above 294 by Monday. NQES, I think the current structure on like the 30 or the 98 minute, generally I would say NQ looks a lot more bullish than ES simply because we already closed above, like going over here and looking at these wicks here, we already kind of closed almost above. We're definitely fighting right now, but we closed above a very significant level here. Pretty much
Sails down, anchors up.
anything past
Just
2145, there is no resistance. Right, so there's a tiny level around like 2204 because we have this tiny wick here. But past this, I mean, we should really just go up to 20.3 pretty easily. What do I think it's going to happen today? I think there's a pretty decent chance. I would say it's like 40%, simply because of this single 95 or 98 minute candle, as well as this 195 minute being super bullish, right? I think this is a very clear sign that the market wants to run. But I'll get into why. I mean, I already predicted that last week. ES, though, I think is a little bit different. The structure between March 10th to the 28th has us a lot more neutral than NQ, right? I think it is pretty easy to see that this 56.94 level is very significant. We've kind of rejected here multiple times. And it isn't until we can very cleanly close above that we run to the next level of 57.71. We can kind of see here in every single example here that it wasn't until we had a very strong candle above this 56.94 level that we didn't run. So until we can kind of see that on the 195 here on ES, probably best to not hold anything other than tech. But thankfully, I mean, positioned well right now into AVGO and Tesla. Ironically, NQ looks better even after Amazon and Apple kind of did not do well for their earnings, but good to see for our positions. I think that kind of goes over very quickly what I expect from the market today. So I will go into exactly how I arrived at my kind of predictions, where I think we were coming up to like this 57.27 level and eventually 58.20. So let's see. Let's go to a clean chart. And let's go on the daily. So there's a couple things here that I want to point out, and it does kind of revolve around the Elliott wave theory concepts. One of them, I guess I should say, the most important concept is that no matter the kind of correction you're in, as long as you can identify the fact you're in a correction, you can easily tell what the last leg of that correction is going to be, because it's almost always the same. There are very niche scenarios in terms of Elliott wave theory where a correction does not have the same leg as the other corrective patterns. But I would say like 95% of the time you're going to get the same overall structure. in terms of the correction, right? So um, generally, what you will see is whether it's a 3-leg move down for a correction, or you have some kind of complex, right, like WXY, like WX, like YZ or whatever, where it's kind of like this. Regardless, this leg here, here, and here will always be the same. It will always be 5 waves down. And generally, the extensions are the same as well. So as long as you can kind of identify the pattern behind whatever the leg you're looking at, you can pretty easily assume at a high probability where the corrective pattern will end. So in this case, what I did was basically just assume, let me see, let me look at my fibs really quick. Sorry. So what I did was just I found, right, where this last leg of the correction is. And in this case, I think it's pretty undeniable at this point, right, when you're looking at some kind of market structure, that you're in some kind of correction. So this is kind of where I believe most of the power from Elliott wave comes from, is when you can pretty undeniably state or conclude that you are in some kind of pattern. Which also kind of plays into the reason why I hate Elliott wave theory, because I think a lot of people in this community, at least, are very familiar with Elliott wave. And if you gave the same chart to 100 people that quote unquote know Elliott wave, you're probably going to get 100 different charts. However, there are certain areas on a chart where you can undeniably state, okay, this is probably some part of a correction. Right? And in this case, this is where that is. So the nice thing is that after a correction, the only thing something can be is an impulse, right? Now, whether it be a singular part of the correction, right? So in this case, maybe the structure is this, or this is the correction, or maybe, right, the structure is like, let's do this, this, and this, right? And then let's do it in white. So there's two kind of possibilities that I wanted to go over. One is the fact that, okay, maybe this is the local bottom, or this is the true bottom rather for the market, and we are in a new impulse. The other one is that maybe this is just the first part of the correction, and then we have some kind of move up, and then we'll eventually get a bigger move down. Regardless, once you find evidence that the first part of this correction or the last part of this correction is over, all you have to do then is kind of see the first parts of what is happening from that low. Right, so what I was doing, I was assessing this price action here, because once you can correctly see, I would say like the first two subsequent waves from that low, you can probably assume what is going to happen next, because the first two legs of a move following a corrective move down should be enough to tell you what is happening. So in this case, because to me this is very clearly 3 waves up, so A, B, C, and then pretty clearly like 3 waves move down. The odds of us still being in some kind of correction is pretty high. I think I talked to Yerba, I didn't talk to him, but I mentioned it in his channel, what my thoughts were, and kind of I assumed that we were still going to come up a lot higher. Generally, one of the reasons why is because if you are still in a correction and you are in this kind of B wave move up, the B wave is actually very, very impulsive. So A, B, and then C. This B wave is actually very impulsive. Generally, you'll find that, or I shouldn't say impulsive, but it's very volatile in nature. So you'll find that after whatever move up there is, the following move down or the pullback will be very overlapping in nature, because that is what is very characteristic of corrections. You'll find that there are a lot of moves that overlap with each other, or I think more commonly known as engulfing. Right? And we can kind of see here in the beginning leg of these correction, or beginning leg of whatever this move is, we can see that kind of taking into play. All right, we get a very fast move up to 52.61, and then we're followed by this massive move down that completely engulfs it. So generally, another thing to point out is that if you do think that this is the true market bottom at 48.50, and you're assuming that this is some kind of impulse now, you never want to see this kind of be the beginning of the impulse, right? You never want your second wave retracement to be 90%, right? The odds of that being true, or the odds of that being the correct count, is near zero, right? So in this case, because it is very clearly, I would say 3 waves, you cannot count 5 waves in here. We're probably still in some kind of correction. There's a chance that we are in some kind of diagonal, because diagonals can be 3, 3, 3, 3, 3 in terms of structure. But I think the odds of that is also low. Reason being is, if I go on the weekly, and I just look at market structure alone, this level here doesn't really mean anything to me. This 48.40 level, the only term, or the only area of significance where this was a previously significant level was here, and even then, I don't think it is very, very, very relevant. Anyways, sorry, one sec. Anyways, now that at this point in the market, I think is like around here, is when I started to say, okay, we are probably going to have a very bullish move up, because right after this, I think it was very clear to me that we were in some kind of like A move up here, right, followed by B, and then we get this final leg up here on the C leg. So what I'm thinking right now in this current moment on this chart is, okay, where can I assume the low is going to be, and what are the possible options that this B leg can be? One sec, let me close the window. Someone is gardening right now. Okay. So 2 kind of things I'm thinking: where is this B wave going to end? And 2, what can this B wave be? The only options were some kind of triangle. So A, B, C, D, E, where we kind of coil on this B wave, or just some kind of like a regular flat, regular zigzag. I think it cannot be a zigzag, because the first couple moves are not impulsive enough. Right, we're kind of flat in nature. So 2 things it can be is just this, or this. And all I had to do was just find evidence. So keeping those 2 possibilities in mind, at this point, triangles in terms of B waves have to kind of consolidate inwards, right? And in this case, once we get this kind of move down, obviously it's not consolidating inwards, right? We broke the A low. So in this case, just draw your extension, because the common fib relationships between flats is that the C leg is usually 1-to-1 of the A leg. Right, so what do we see here? Well, it's literally 1-to-1, right? We kind of get that wick here at the 100% extension, and then we get the very fast move off of the low, right? So that is very indicative of some kind of correction ending, right? So as we're moving forward, this is where I become really, really confident that we are very bullish in the short term time frame. Short term being like 2 to 3 weeks, because one, we closed at the 100% extension, and then two, I think, what did I see here? There's something else that I had. But anyways, this is like the main contributing factor as to why I believe that this was the low. This 51.28 area was the low. Right. So all you have to do now is kind of just, okay, what are the going back to what I mentioned in the kind of beginning part of this video, is once you identify that the correction is happening, then the last leg of the correction will always be the same, right? So the reason why I'm saying correction, even though we're moving up, is because this B leg, right, if we think about it in terms of if we think about this B leg in terms of like at a bearish standpoint, where we want to be bearish, then a correction would be a move up, right? And because the overall structure, I am assuming, is still corrective, then right, the B leg is also corrective, right? I don't know, that sounded pretty confusing even to me, but generally, because I think it's an ABC, and because I think this is an ABC, then the third wave, right? Sorry, this third move up should be some kind of impulse. So it would be like this, right? No matter what, the structure for general or for the common corrective structures in Elliott wave theory are flats and zigzags, and their structure will always be this 3-3-5. Or zigzags would be like 5-3-5. So this, we visualize it better for everyone. So this is the A, this is the B, and this is the C. Right, so lining it up here. Right. Flat A would be 3, zigzag A would be 5, etc., etc. So this is the very important thing, is the C leg here. Right, this is kind of what we want to play, because regardless of us being in a flat or a zigzag, this C leg will always be a 5-wave move up, and it will always be an impulse. No matter what, it will always be an impulse. I'd say just kind of treat it the same. Generally, I would say the C leg of a correction is very, very volatile. Right, so you just kind of, from that characteristic, all I did was just find some extensions, some very, very basic extensions, and then just play off of the price action. Right, so going to my actual chart here, this was the overall AB. So this was the overall AB. So then we get some C wave. I think I did mention it earlier, but this C leg usually is 1-to-1 of whatever the A wave is. So that's how I got the 57.27 level. I have the extension. I have the, let's see, where is it? Oh, sorry, 58.20 rather. So this would be 1-to-1. I have the mini extension from the first structural support that we have from this impulse move up, where I literally just took the beginning of the impulse, I took the next local high, and then I took the next local low, right? Like, it's very simple. And from this, we can kind of see that we do. Let's focus mostly on the 618s here, right? So let me just hide everything else, so it's easier for everyone to see. Which one is this one? Right, so two extensions, right? The overall structure being this massive AB, and then the first, and then the first extension for the lower structure being like this 1-2, right? So 1-2. Then we can kind of see here that just the significance behind the 618, which is a big reason why I thought we were like this count was correct, right? Because of the initial reaction to this 618, we can see here that we literally just held underneath for a few days, and it wasn't like we hit this 55.85 level, and then we rejected, right? So kind of further supporting the fact that this was the correct extension. That's all I was looking for. Is just general market structure, right? So I have this level here because this is the identified range, right? This would be like the liquidity wick right here. Oops. Right. Here. Oh my god. Oops. Here and here. Yada yada yada. And then, I mean, a lot of talking. I haven't done this in a while. But yeah, I mean, I think the big thing to summarize was the fact that this initial move off of the low was like the biggest tell for me, because there's just no way there's no way an Elliottician or someone that works with Elliott wave can confidently say that this was like a 5-wave move up. There's just no way, right? I mean, even without knowing Elliott wave, I don't think you can see that. I don't think you can count the 5-wave structure here, right? Right, there's only 3. What did I just do? Okay. Yeah, there's only 3. And then after that, right, you kind of look to where the next impulse is, right? We can kind of see here that I think at this point you can kind of say that we are no longer in some kind of correction on the lower time frames, right? So then you kind of ask yourself, okay, between this and the last time we moved up, what happened in between? So here, right, you also ask yourself, okay, I mean, this is where you kind of need to know Elliott wave. So you kind of just ask yourself, okay, what are the common patterns that you generally see in a correction? Usually they are flats or zigzags. And in this case, I think that it's pretty easy to say that we are in some kind of flat, right? Because this B wave retraces at least 88.7%. Yeah, it retraces literally 88.7% of the A wave. And then this C leg is 100% or 1-to-1 of the A leg, right? So like it is just textbook Elliott wave, textbook. So in that case, you literally just assume that the same thing is going to happen, because everything I do now is just based off patterns, right? Because what do patterns do? They literally repeat themselves. So yeah, I mean, we close above this 55.85 level. I asked myself, okay, I looked to the past. I looked at the past times we were here. And then I asked myself, okay, what happened at certain levels? That's how I get my price targets, right? Even then, because people ask me a lot, like, how do you get this level when there's no fib extension here? Well, I just look at the past price action. Because to me, even though I talked a lot today about like fib extensions and Elliott wave theory, if I had to choose one, I would just look at the price action, because that's all like I really need. This stuff I just talked about right now is just like, I wouldn't say it's fluff, but it's extra, right? You don't need this to be successful. You don't need to know, you don't need to be able to predict when a low is going to happen, because if you have been following me and you're in the channel, you know I separate things into two things, where it's prediction or confirmation. And I try to stress that confirmation matters way more. And if you are taking some kind of prediction move, then you should scale in less, right? Because the odds of you being correct when you're trying to predict something so hard or so difficult, such as like a common low, or sorry, a local low or a local high. I mean, like you're you're putting yourself on the same pedestal as like those algorithms that it took like thousands of quant coders to kind of create, right? Um, so why put yourself in that battle? Why not just wait until you get some kind of close above a certain level, uh, where you kind of see like clear skies, right? That isn't to say like the stuff I just did isn't relevant. I mean, obviously it did help me have a bias, um, and it helped me like not care really about any of these dips here, even though I was long. So I mean, it's like a double-edged sword, really. I also talked about it like in my channel where I talked about like confidence and how it's dangerous. But I think at least at this point in my trading career, I can pretty confidently say that I'm usually correct. Um, but yeah, I think that kind of wraps up. I know it's confusing. I do kind of assume that the person listening to this video has some idea of Elliott wave theory and at least the way I trade. Um, but yeah, I at least make it a little easier to follow in real time when when I'm posting my thoughts on the market, whether it be in the morning or the previous day. Um, and at least right now, I have been enjoying this volatility a lot more. Right, I've been a lot more proactive in my alerts, I would say. Um, right, where I'm really just giving a lot of like BTOs and sell to closes, or I'm just more comfortable with like saying to go long very confidently or saying to go short very confidently. So
Shiro, I do have a question when you have a chance.
yeah. Shoot.
So in terms of the ES price action, the NQ price action, I do see that you're saying it's going to be a 1-to-1. I do see from the whole move down, it is at a golden zone. If you were to do that, fib retracement. So I
Okay,
did want
let's.
to ask,
Mm-hmm.
would you have that as an, added confirmation, or would you just ignore it based on this price action?
So the one thing when looking at these kinds of retracements, yes, this is a very significant retracement, and yes, um, I do think that you will probably get some kind of reaction, um, right? Because the golden zone is usually very significant. But in terms of, I would say, like macro level counts, and macro kind of retracements, it is very difficult to actually find that the golden zone, when you do this kind of retracement with a massive amount of data, the odds of you being correct just by pulling the retracement alone is pretty low, I would say. Is because, and that's because of just the nature behind corrections, on in terms of Elliott wave. Generally, the second wave, quote unquote, is where the golden zone is usually the most relevant. And in this case, right, you're trading a correction. So like the B wave of some kind of move down, or like the fourth wave of some kind of move down, is not always going to be at the golden zone. So, I mean, I think even with the price action right now, we can kind of see, I mean, this is a massive range, right? This is a 200-point range for NQ. So maybe it isn't until like the 0.65 where we start to get a reaction. But I think expecting a move right away off of the golden zone from this amount of data is just irresponsible. So like I know that the person asking this question is not trading multiple days at a time, like is not holding their position for multiple days at a time. So I know that, like, because of that, I think it is just irrelevant to have this retracement on their chart. So I hope that answers your question, or at least helps you realize that it's not really important, or that retracement isn't important. But anyways, I think nice to see that the beginning of my video is kind of correct, where I just kind of assumed that we were going to just moon, right? Because this 185 closed very, very strongly on 2144. So yeah, okay, let's do a quick update on my positions. I mean, AVGO looks wonderful. Right, I think we now that we have kind of accepted into this area on the left here, there's really nothing stopping us to around this like 211 area. Right, the extension is kind of whatever to me, I would say, because it doesn't really. I mean, it kind of aligns with the previous price action, right? We kind of get like this this body here, this wick here. But generally, I would say like my price target for now is like 211 ish. Like around here. Tesla, I mean, really just need above 294. So it's kind of whatever. But yeah, thank you for coming to my session and watching the video. I will stop the recording here, but I'll take a few questions afterwards. Let me stop it here.